Hey guys, it's Will here. Wanted to talk about 3x leveraged ETFs. I saw a lot of videos on this, and there's a lot of fear in sort of what I consider misleading information about it, or I just have a simpler way of looking at this, so I thought I would talk about that, especially in this market right now. So there's a company called Direction. They have a bunch of leveraged and inverse ETFs here, and I'm going to talk about Nail in particular because this is a home builder and supply bull 3x, and it's been beat up pretty good with the situation that we have. And they show the stocks that are in there, so we can have a look at those. So basically, when I was looking at videos on these leveraged ETFs, one of the biggest things they talk about was every day it gets rebalanced, and they're trying to mimic the daily return, which it even mentions here. And that's true. And so if you hold it for longer periods of time, there's a sort of a decay, I guess you could say, in the sense that because of this daily adjustment, you're not going to get the return that you would see, if that weren't the case. So what happens is that if that sort of makes people think they should only buy it, during the day and then sell it and not really hold it and stuff like that. And I have a simpler way of looking at these. I just look at what's the price you purchased for it and what is the price when you sell it. And even if there's a little bit of decay in there, it's still quite a leveraged multiple of the underlying stocks. So I'll give you an example. Oh yeah, the other thing is that there's going to be more of that issue with a volatile or up and down market versus more of just a linear or a trend sort of situation. So, but if we look at, okay, let's go to the one they mentioned here, DR Horton and Lennar. Those are the top two ones. So if I go to Horton, and what we're going to do is look at the percent return from the bottom here, so up to here. So if I go down to the very bottom here, March 18th, and I drag the mouse up to today, or May 1st, about 82%. So that's a nice feature of TC2000. You can drag the mouse and see not only you can see the time frame, the date, 1.4 months, and the annualized return of that. So I really use that a lot for targets and stuff when I'm setting targets for stocks. So 82% roughly. And if we go to Lennar, from the very low to roughly May 1st, 94.5, so 95%. So if that's the actual gain of those two stocks. So the ETF is a mix of a bunch of stocks, but those are two of the bigger weighted ones. And then if we go to Nail, and it looks kind of flatter, but that's because it dropped so much. If we look at, say, the bottom on the 18th, drag that to May 1st, that's 240% right now. So it's not, so like you had one of them was 80 something percent. And so it's pretty close to about 3x. Like I said, it's going to be a mix of a whole bunch of stocks, so it might lower the, the one I showed you, 85 and 90%. It might not be that high once you add in all the other stocks. But so if you're looking at 80 or so percent of each stock, on average, this is actually pretty close to 3 times. So all you have to think about is you look at the stock, or you look at this ETF and you think, when should I buy and when should I sell? Some people might want to hold it if you happen to buy, down at the bottom, which I don't recommend myself, but you'd be looking at a huge gain, as you can tell. But a lot of people I've noticed, just in even regular stocks, they like to buy when they think it's come down a lot. And you could get, you could be screwed if you do that here, but if you're going to wait long enough, it might work. What I'm recommending mostly is to look at the charts and to buy them on the uptrend, and it's for shorter duration. So somewhere here, let me just put an arrow. I think I have a drawing here. Yeah. So ideally, in my case, obviously you could look here and say, oh, it went up to here. But what I like to do is buy it on the uptrend, and this would be a great entry point because you're breaking through the 8 EMA, and it kind of drives up to the 34, and it doesn't quite get there. So if you're buying near a trend line, oh yeah, the other thing you can do is draw a trend line. You can see here that from the low, there were higher lows here, each one of these, and then you have a higher high up here and at the peak. So you're moving upwards in a trend right now, and ideally you want to get it when it's close to the trend line. And then as it goes up, you can look at various resistance levels, which is often the moving averages. But this one has a lot of potential. But I just wanted to show you, because I think a lot of people are scared and they think they can't hold this for more than a day. Now there is a lot of volatility right now. You can see the gaps in between each day. I actually took advantage of that. But it's a bit risky in that sense. You can see here since Wednesday, it gapped down, and then it gapped down all the way down to here, and then it came back at the end of the day. So this thing can gap up and down, and the gains, daily percentages can be pretty big. Like, so if I go from the close of this day to the close of that day, you're looking at about 20%. So you can make a lot of money, but you can also have a big drop as well. If we go back to the last uptrend, so say January, this is a nice uptrend, you can see. So that it has a capability of, if you draw a line, you could start to ride this trend. It actually got steeper, but many times it just has a generally positive upslope, So that's mainly what I wanted to say. And they have other ETFs. They're not all 3X, but you've got gold. So it's kind of like sectors and stuff. You got regional banks, you have semiconductors. Retail is one that hopefully, will come back at some point. Banks. There's stuff for biotech, Labu, it's called. And these are 3Xs, but then you have some 2X for energy, Gush, ERX and Gush, and then you have JNUG and Nugget, which are the gold miners. And so don't be afraid to use these. Now, there are obviously risks and higher volatility, but you can definitely, if you're going to buy some of these, you can definitely hold them. Let me just take a look at Gush. Actually, in the chart. So I scrolled back here, but there are periods of obvious downtrends and uptrends. Right now, you can see also that there's a good uptrend, and recently on Friday it kind of dropped, and it's close to the 8 EMA. So if it starts to turn around again, there might be a good entry point. But yeah, like you can get just from that day where it went up to here, 81%. That's just from April 17th. If you buy right there as it comes up through the T line or pulls back, you see it how it comes up and pulls back down. So it's got a ways to go back eventually as well. Hope that helps, guys. We'll talk to you later.